Hey everyone, and welcome to this explainer. Today we are breaking down a sector that is quite literally powering the future, yet somehow finds itself at a massive crossroads right now. I'm talking about the VanEck Semiconductor ETF, widely known by its ticker, SMH. Look, if you've been tracking the artificial intelligence narrative even just a little bit, you already know that semiconductors are the absolute backbone of this entire AI revolution. I mean, without these chips, the whole AI story just grinds to a halt. But right now, this foundational ETF is sitting at a really pivotal moment, and we need to unpack exactly what's going on under the hood.
Okay, let's dive into this, because there is a fascinating central tension playing out right in front of us. On one hand, SMH is viewed by a lot of folks as the absolute best, most direct way to own the AI trade. But on the other hand, a growing chorus of voices is suddenly calling it the single riskiest bets in the market today. So why the sudden panic? Well, recently, SMH dropped by over 4% in a single 24-hour period. That kind of sharp, sudden movement has left the market completely split. The big question is, are we just looking at a healthy, expected pullback in a massive long-term uptrend? Or is this, the first real crack in the foundation?
All right, let's get into Section 1, the crossroads, technical tipping points.
So right now, we can kind of anchor the current price around that $570 mark. Just below us is a really critical support floor at $565. If the price breaks below that $565 level, it totally opens up the risk of a severe wave of selling. Conversely, the resistance ceiling sits up at $590. If SMH can somehow push through that $590 barrier, it boldly signals that the bulls are still firmly running the show. We are basically trapped in this high-stakes wait-and-see zone.
But here is where things get a bit spooky. The number 600 represents a massive concentration of options delta, basically a really heavy cluster of options contracts sitting right at that level. Why is this a major warning sign? Because if that $565 support floor we just talked about actually breaks, the positioning around all these options could trigger a forced downward spiral, literally dragging the price all the way down to the $550 mark. The technical trapdoor is wide open. But hey, technicals are really just one half of the story.
Which brings us to part 2, the bull case. Why AI is still king.
Just to wrap our heads around the sheer scale of this boom, global AI infrastructure spending is projected to hit an astronomical $450 billion by the year 2026. Let that sink in. This isn't just hype anymore. This is real capital being aggressively deployed to build out the physical architecture of tomorrow's technology.
Now, what's really interesting here is that huge 70% chunk. That represents spending on inference. In the AI world, inference is the phase where AI models are actually being used out in the real world to make predictions and generate results, as opposed to just being trained in a lab somewhere. For the first time ever, inference accounts for over 70% of spending. This proves the technology isn't just in some R&D phase anymore. It's actively being deployed, integrated, and utilized by everyday businesses.
And who's actually writing the checks for all of this? The biggest players on the board. $600 billion represents the staggering combined capital expenditure expected this year alone from Alphabet, Amazon, Meta, and Microsoft. To put that into perspective, that is nearly double what these exact same companies spent just 2 short years ago, and the vast majority of that cash is flowing straight into AI infrastructure. All that spending surge directly impacts critical components like high-bandwidth memory, or HBM, which is absolutely vital for these AI processors to even function. The HBM market is surging by 58% this year alone, reaching a valuation of $54.6 billion. And here is the absolute kicker for chip makers. Right now, supply is lagging behind demand by about 50 to 60%. When demand drastically outpaces supply like that, chip makers hold immense pricing power. They can basically name their price. So, when you aggregate all of that fundamental strength, the $450 billion infrastructure spend, the big tech capex, the massive demand for memory, it all leads to this. Wall Street's average price target for SMH is sitting way up around $760. That represents roughly a 30% upside from where we are right now. To the optimist looking at this data, any recent pullback we've had is merely background noise in a very early innings growth story. But we have to look at both sides of the coin. Section 3, the bear case, overheating and the bubble.
Let's start by talking about valuations because they are getting pretty wild. SMH recently blew past a forward PE of 31 times. Historically speaking, that is highly stretched. In fact, according to GF Value Estimates, SMH is currently overvalued by nearly 33%. You are paying top dollar. Actually, scratch that. You're paying a massive premium for those expected future earnings.
And honestly, it gets even more concerning when you look at sector-wide sentiment. Rating upgrades for semiconductor companies are currently approaching 80%. We literally have not seen this level of widespread bullish upgrades since 2003. Historically, when almost everyone is upgrading a sector at the exact same time, it usually signals an earnings upgrade cycle that is dangerously close to peaking. It's the classic market adage, when everyone is already bullish, who's actually left to buy?
Which brings us to the $129 million elephant in the room. Someone out there has a very, very strong opinion on this because in mid-August, a mysterious trader placed a $129 million bet directly against SMH by buying put options that expire in November. Let me be super clear about this. This is not some small protective hedge by a cautious investor. This is a massive, directional, high-conviction bet that SMH is going to take a significant nosedive in the coming months. That staggering $129 million bet connects directly to these broader, growing fears of a speculative bubble. It completely echoes what some billionaires have recently referred to as an Enron-style warning for AI stocks, a pretty stark reminder that market hype can, and often does, outpace economic reality. Adding fuel to the fire, Michael Burry, the famous investor from The Big Short, has reportedly been increasing his short positions in AI-related names, actively betting against this speculative frenzy. So the crucial point is, Part 4, Navigating Your Next Move. The most effective way to look at all of this is to cleanly separate your strategy based on your time horizon. If you're a long-term investor, the data clearly shows that AI demand is very real. The infrastructure build-out is undeniably massive, and SMH offers great diversified exposure to the companies right at the heart of that long-term trend. However, if you're a short-term trader or you're actively managing risk, your dashboard is absolutely flashing yellow. You are facing thin technical support, historically high valuations, huge bearish options positioning, and even emerging signs of credit stress in the sector. So here is your concrete game plan for the coming days and weeks. Step 1. Religiously watch that $565 support level we outlined earlier. Step 2. Prepare for the outcome. If that 565 floor holds, the bulls might just gather enough momentum to push this thing back up to the 590 resistance. But be warned, if that 565 level breaks, the bearish pressures we just discussed could easily force a severe, much deeper pullback toward 530 or potentially even $500.
Ultimately, the long-term story of AI semiconductors remains fully intact. But in the immediate future, you really have to weigh this massive structural growth against some very severe, very real short-term risks. So I leave you with this final pivotal question to chew on before you make your next move in the market. Are we truly investing in the undeniable future of AI, or are we just eagerly speculating on a really expensive bubble?